I'm bullish on both commodities, and I'll tell you why. Number one, only for the second time in my 41-year career did I see the consolidation we just saw the last 24 months. So back in the 1990s, we saw, Exxon buy out Mobil, Texaco got bought by Chevron. So we saw a lot of the original seven big sisters got acquired. That was the first time we saw this major big bull elephant eat another big bull elephant happen again in the last 24 months. So what you've had is a consolidation of assets, an elimination of viable companies that can go out and drill, baby, drill. And you see, in my view, probably the largest concentration of highly skilled oil and gas workers who cannot find a job. Because when Exxon bought out Pioneer, adios, 15,000 employees don't need you, right? That was the first thing. The second thing is the cost of capital is a lot more expensive than it was in 2016. So everybody's anticipating Trump's going to try to push down inflation. He's going to try to push down the Fed rate. Not going to happen. You can't go have this demand of robust economy. He's going to have this infrastructure rollout. We're going to be manufacturing home. Let me tell you something. We're already struggling on the supply side. We already have limitation on the intellectual staffing of human resources, right? We already have all these other issues going on. And now you're going to say, we want to drill, baby, drill. Well, I can guarantee you the cost of break even for these wells is not $37 or $40 a barrel. It's probably moving closer to $45 to $50 a barrel. People will argue that because they're saying, well, we're getting more volume out, which allows us to say that we're actually at a lower break even. But if you're sucking out more reserves faster, it doesn't mean you're making more money. You just found a better, faster straw. The truth is that we have a higher cost of capital. We have lower assets in terms of people and equipment. We have a higher rotation, meaning we're depleting the wells faster. We're on a treadmill. And if you think about what he's going to do with sanctions against Iran and Russia and Venezuela and other countries, he's going to pull 2 to 3 million barrels out of the market by purely saying we're going back to the Iranian sanctions that we had before. So we've got to make up 500 million barrels to the SPR. We got to pay off a $36 trillion debt. You only do that through inflation. What does inflation do? It rises prices higher than they are today. You create stagflation by not having growth, and oil and gas prices do really, really well.